It's working. It's working. Hello, everybody. My name's Sincerely George, and I'm here for All Things XRP. I put my mind towards creating shorter videos, and it's working. Yay! I like short videos myself. So let's get right to it. In this video, we're going to talk about the regulatory landscape as it exists in December 2018. Yes, in the last video, we talked about asset classes and specifically how, we're thinking that cryptocurrencies or digital assets are going to become a new asset class. And if it does become a new asset class, there are a couple of requirements, right? One of the requirements would be that we get regulatory clarity on, how to classify, how they're taxed, and how governments of the world treat digital assets. Another requirement would be that some of the largest investment companies around the globe get involved in helping people buy, sell, trade these digital assets. So without further ado, let's get right on into it. So in the last video, we stopped. Let me close a couple of these because I am not the smartest person sometimes. So this is where I wanted to go. So digital asset basics. So this page is one of the pages off of the Fidelity Digital Asset site. And so Fidelity, the reason we're on this page is because Fidelity is starting to get into digital assets, and as they try to launch their business in this area, they're working really hard to educate people on digital assets. So they've actually created a glossary of key terms and our insights on the fundamentals of Bitcoin, blockchain, and digital assets, right? So totally new. We don't know what to call it, but we're not going to call it cryptocurrency because that just sounds faux pas. So, they're starting their own digital asset trading desk. I don't know exactly how much it is to start using their service, but you need a lot more money than I have, and it's really for rich people at this point. But as we start to move into this new asset class, since cryptocurrencies are not traded on the stock market, we need to have a framework for trading them. But before these companies like Fidelity can start trading them, they need regulatory clarity. So, as blockchains and digital asset adoption around the world accelerates, so too has the conversation on how they should be treated by regulators. This critical topic was the major focus on stage at this year's Swell by Ripple conference. So, even Ripple, the number one company working with XRP, thinks that that regulatory clarity is provided. This diagram that I'm showing you here shows you that digital assets are not just something that, people like me who spend a lot of time working on their computer are thinking about. Governments around the world are thinking about it. And, I just wanted to show this because we are getting regulatory clarity, and you can bet your bottom dollar that as soon as we have regulatory clarity, we will see a lot more companies moving in and starting to leverage blockchain as long as it's allowed, right? And the funny thing about it is that there's countries around the globe that are saying, we ban Bitcoin, we ban cryptocurrencies. And why would they say this? Well, cryptocurrencies, right? Money, digital money it has the ability to compete with government issued money. And so that's one reason why the phrase cryptocurrency isn't necessarily the most popular phrase, because we're seeking regulatory clarity, and most digital assets were not created to operate as cash. Some were, but most weren't. Okay, they are used for tokenization and utility, and used within a system to allow for exchange of value and for a system to operate well. So, if you're ever talking to a government official, please try to use the word digital asset or crypto asset instead of cryptocurrency, so that you can help us further our cause. But regulatory clarity is coming soon. And as this diagram shows, all of the different nations of the world are seeking to get us there, and a couple have. And the countries that have already provided regulatory clarity are in the forefront because companies from countries that do not provide regulatory clarity, so companies are moving to the places where they have the clarity so that they can continue doing business. Obviously, time to slow down. All right. So this site, and this is the Library of Congress. I brought this page up because, this is an important topic. I'm not crazy when I say that this is something that is being worked on. This site is from the Library of Congress, the U.S. Library of Congress. And here they try to detail all of the attempts to create regulatory clarity and define where each country is in their definition of regulatory clarity here. So if you want to go deep dive on that, all the power to you. So most of you, I expect none of you knew this, but there's a new player in town. There's a new player in town, and it's called Bakkt, right? And Bakkt, and just like Fidelity Digital Assets, is planning on being a major player in the digital asset space. But before they can get involved, they need regulatory clarity. And Fidelity and Bakkt are not leaving the United States, and here's why. So Bakkt will be the new company owned by the Intercontinental Exchange. Intercontinental Exchange is a U.S.-based company that owns exchanges for financial and commodities markets. Okay, but more importantly, I already stole my own thunder. Does ICE own New York Stock Exchange? Does Intercontinental Exchange own the New York Stock Exchange? And the answer is yes. ICE bought the New York Stock Exchange, the parent company of the New York Stock Exchange, in 2013. So they're not going anywhere, right? They just need the regulatory clarity so that they can start playing in this area that's going to explode in profitability, right? So ICE makes its move into the $15 trillion U.S. mortgage market. Like this is big, big money, right? If they could just sprinkle some on me, I'm sure I'd have a lot of it. But what I'm trying to show you here is that this is a massive company that is getting involved in cryptocurrencies. Currently, ICE or Intercontinental Exchange provides exchange and trading clearing services in a number of different markets, including trading futures and options. So this area includes agriculture, finances, oil and gas, electricity, natural gas, UK natural gas, and others. They also have markets like the New York Stock Exchange, the ICE Futures US, and clearinghouses, right? Now, I don't understand the differentiation of all these different things, but these are the places where money is being moved around and traded around the globe. And this is really important because Bakkt, which is a new service offering that ICE is trying to offer, is going to be trust and utility to digital assets, right? So on their website, they say, Bakkt is building an open, seamless global network to enable you to buy, sell, store, and spend digital assets simply, safely, and efficiently, right? Backed by Intercontinental Exchange's proven financial market infrastructure and technology, Bakkt's secure global platform will connect investors, merchants, consumers, and make it easier, faster, and more cost-effective to access, trade, and use digital assets. Bingo. Right? They want into this market, but they can't really get in until regulators tell them whether crypto assets are they securities? What are they? How will they be classified? And how will they be taxed? Okay, so let's go full circle and close out this discussion with a discussion about Fidelity. So as we talked about at the very beginning, Fidelity is one of the largest investment firms. And, they are also launching their own trading desk, specifically called Fidelity Digital Assets. And, right here, I just Google it for yourself. You'll come up with massive results. Here's one on Forbes. Fidelity launches institutional platform for Bitcoin and Ethereum. Fidelity Investments' Tom Jessup believes 2019 will be a big year for crypto assets. 5 reasons why Fidelity is embracing cryptocurrencies, right? So I just wanted to share this information with you because I know, because I know you. I know you. I know who's watching this video, at least some of you. And I know you're going to go, who cares? It doesn't matter. Doesn't impact me. But if you could have been one of the miners that showed up first in California to mine for gold, would you have wanted to be there, or would you have said, who cares? Right? And that's what we're talking about. You know, the small investment that we're talking about right now is small. It doesn't add up to much. But we're at the dawn of a new era. And just because it values to be a very low level today doesn't mean that that's what it's going to be forever. Once we get regulatory clarity, things are going to change. And that's why I think it's very important that I share this information with you in regards to, asset classes and, the regulatory clarity that is coming, so that, you can start to do your own research and decide where you want to move with the investments that you have. So I don't want this to be a long video. The goal was to just help you understand that where we are with regulations. And yeah, on that, I'll end. Bye. 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 I like 3.